Okay, Varshan. So Trump's tariffs didn't hit.
Yep.
Does that mean we're back to normal? Is life good now? Are we going back to the old ways?
Definitely not, man. Definitely not. As you've seen, it's just put on a pause for 30 days. So it's just prolonging, the inevitable, right? I do think he's still going to implement it. Obviously I'm no politician or no political expert, but I do think he's just playing this to, strong arm us into a better agreement for the Americans. So it was nice to see the Canadians push back and fight back because it's not usually in our nature.
Exactly.
But I think Trudeau did some his best work.
Yeah. That's a good way to look at it. That is a good way to look at it.
Versus the last 10 years or whatnot, right? It was a very proud Canadian moment that, we were able to fight back and get things, figured out.
Mm-hmm.
But anyhow, I do think it will still be implemented in March because I don't see, the situation at the border, which they're talking about, suddenly be resolved in 30 days. Right?
Yeah. So there's a lot of different theories online right now about what's happening, why it happened. Is Trump bluffing? And so, yes, border security was already implemented before the fact.
Yes, I saw that.
I'm not sure about the details, but apparently it was already in place. And now we're just kind of beefing it up a little bit. My understanding as to why this play is even being made is he has to use border security as the loophole to play this game, because he can't just come in and impose tariffs, apparently, based on economic reasons. There needs to be some sort of, what's the word I'm looking for? A national emergency or something to that effect, right? Border control it kind of plays into that.
Yes.
And so that is why he was able to discuss these tariffs, but really what he's looking for is not border control. Yes, it's part of it.
Yeah.
But it's really you can see based on his talks, it's economic, right? He
100%.
doesn't feel like
he's a business guy at the end of the day, right?
So. He doesn't feel like we're contributing, and this is his way to stronghold us into playing our position, for lack of better terms.
Yeah, I agree. And it's wild because it had a huge impact on not just rates, but also our loonie, right? You've seen the U.S. to Canadian dollar plummet.
It's
right?
tanking,
now it's recovering slightly, but it had a huge impact on our economy, right? And I think there's a lot of uncertainty on our economic future because we're already in a struggling state. I think the last GDP results showed that we were actually negative growth.
Yeah.
Right. So if you add this on top, it's probably just going to get worse. Right. So, I mean, now just translating this to a real estate perspective, mortgage rates wise, I guess the benefit is you will see lower rates if the tariffs do prolong, right, or come into effect and prolong. I think
just on that, one thing that I want to say is if rates come down, it's not to say that we're doing better and it's time for relief. It's really just to counteract the tariffs.
That's exactly
it.
It.
That's what we're doing. It's like a buffer.
That's right. That's right. So the funny part, or not the funny part, the sad part is, we're going to save on our mortgage rates, but we're going to pay for it everywhere else.
That's
right?
exactly.
We're going to pay it in the groceries, the gas, everything else, right? So our inflation will go back up, which, could...
This is where it gets tricky, right? Because now it's do you cut? Do you hold? Do you raise? Do you cut because things are slowing down and we need to stimulate?
Yeah.
Or do you raise because you're afraid of inflation? Bank of Canada is again in a hard place again.
It's a hard place, but I think they'll rather go towards a position where they decrease rates than bring economic turmoil, right? So I think they will decrease. I mean, we spoke about it last podcast where they were looking at some sort of relief program similar to what they implemented in COVID, right? So I do think they're leaning towards that if tariffs do prolong. Again, if it's only there for a month, I don't think we'll see much impact past a month. Actually, Bank of Montreal, they revised their future projection on rate cuts. Originally, they had 2 or 3 more rate cuts for this year. They increased that to 6. Right? So I do
3%, I think, by the end of the year.
But that's only if it prolongs. So if tariffs do stay in effect for 6 months or greater, as an example, they do expect that to, affect the market much bigger.
Furthermore.
Yeah. So I think that's also the future projection on rates is if the tariffs come on March 1st as of now and stay there for quite a bit, then we're going to see lower rates for a longer period of time for sure. And if you're looking at renewing, that's great news for you, right? Because obviously you do have to renew, right? You have to pay your mortgage, right? At least if you're a potential buyer, you can wait it out, right? In that sense, right?
Exactly.
But if you're renewing, you have to take a new rate that's going to be higher than what you currently have, right?
Exactly.
So right now we are leaning more towards a variable rate, I would say.
Yep.
If you are able to stomach kind of like
the higher payments temporarily,
possibly, right? But if you want the safer option, the fixed rate will be good too. Because of the tariffs announcements, bond yields plummeted, which resulted in actually some rates coming in the threes, which we haven't seen in some time, right? So that's a positive sign in that effect. I guess good news for buyers as well.
Again, and this feels like history repeating itself again, where we're in this situation where we're cutting rates, but that doesn't necessarily impact the market the way, a lot of people will make you think it does, which is it's going to essentially, cause a frenzy in the market with buyers and sellers.
Agreed. Because even a year ago, people are saying, oh, once the rates get cut, they're going to see like a slew of people coming into the market, right? We have almost 2% rate cut from the peak, right? And
so where's the spike, right? Where's the spike that everybody's been calling for? In actuality, rate cuts just means there's problems in the market and they're trying to mitigate those problems by making that burden of carrying this debt easier on you, right? And they do that by lowering the rate.
Yeah, the reality is people buy when they can afford,
exactly.
Right? And are they able to afford and be comfortable with the new mortgage payments? That's the type of buyers we're seeing right now, right? I don't know if that's something you're seeing as 100%. Well, but that's what we're seeing, yeah.
And real quick, we'll get to that. I think, as you said, buyers buy when they need to buy. And that wasn't necessarily the case for the last couple of years during COVID. And a lot of that had to do with credit availability. And like this never gets spoken about, but correct me if I'm wrong. I don't know if you were checking, but like I heard on the monetary report that they did say quantitative tightening was done.
Yeah, they've done. Yeah,
it's finished, correct. Right?
Yep.
So that signals to the fact that credit is going to become more easily available in the near future,
which could raise inflation again, right?
Exactly, could stimulate it. So like I think, again, as long as they don't head towards quantitative easing, which I don't think they're entertaining that just yet. But like, unless things get really bad, more money is going to be available or accessible, which potentially would cause like a little bit of a spike. But that's just sales. That does not mean pricing, right?
Yes, of course.
That's the difference. Like I always try to make, it's like sales can go up. That does not necessarily translate to pricing.
Yeah, because listings can go up at the same pace or bigger, right?
And they have been.
And that's what we've been seeing, right? So I think also the biggest part of at least talking to some clients as well is, with the tariffs, especially a lot of Canadians working for American companies, what's their job security looking like, right? And that's the biggest fear, right, for a lot of folks. Like, I buy this property, have this big mortgage. What if I lose my job? Am I able to make these payments? Most people are not, right? And that's just the reality of it. And people don't want to put themselves in that position, right? And I think that's the biggest scare that tariffs can have. So when it comes to the market, I mean, I think that now that we have so much supply, right, the demand is going to decrease, which might further decrease prices, right? For me personally, I think condos will start to decrease even further as we go.
I think so too.
Just because the supply is like, what is it, like 20-year high, 25-year high? I don't even know, right? But single family, I think will stay steady. I don't think you'll have that growth that you've seen in the last few years, but maybe like 1-2% or even flat line for the next, I would say 1-2 years is my prediction. But I mean, predictions can't change out of whim, right? So we're not here predicting anything. We're just giving kind of like what we're seeing based on what we see today and what the tariffs say. But there's a lot of uncertainty in terms of the future now because of this whole tariffs versus prior to this tariffs announcement, where we had a little bit more of a clear view of things, how things would play out. But now it's like literally no one knows anything.
No one knows anything. And it feels like people are acknowledging the fact that we don't actually know the direction we're going to head in. And the next year might be rough. Like I'm finally starting to see this conversation happening now. And I don't think anything really changes this year. I think it's just a matter of hanging on. And that's kind of it. I don't think anything changes. Like the market is still very much in a tough state. So if you look at it, so there's two things that I noticed on social media, right? And I hate to say social media all the time, but that's where a lot of people get their news from. And I noticed days on market gets like talked about quite a bit.
Yep.
But so there's 2 days on markets here, right? There's the sales data and then there's the days on market. And if you look at the homes that are selling, yes, the days on market is lower. We're at like 22 days, 23 days. But if you're just looking at the active listings, we're double that number. We're like 45, if not like just around active listings.
Yeah.
So like
which area is this in?
So I'm looking at just like overall Toronto. So this number is Toronto, Durham. So I can give you Toronto right now.
Wow,
it's just staying on Durham, 45 days active listings and 22 sold. And so that, to me, what that speaks to is the fact that the price that people want, they're not getting it. And therefore they're getting stuck, right?
And there's a lot of delistings happening as well, right?
Tons of delistings.
I saw a stat, 1 in 5 houses in December were delisted.
Okay, exactly. And so that goes back to this number here. It's because the price that people are expecting is too far out of reach.
Yeah.
They have to come back to reality. And
Agreed.
Coming to that price point would mean they're going to have to take a big loss.
Especially the ones who bought from like 2022 to 2023.
Yeah.
They're
in the worst.
Struggling. Yeah.
They're like I'll just use Durham as an example. If you bought something newer, if you bought something detached, you're looking at somewhere between 100 to 200,000. You're going to be upside down.
Yeah.
Right. Which is like a big pill to swallow for a lot of people.
Oh man. Yeah. For sure.
Yeah.
And just on a mortgage perspective, what I'm seeing a lot of people struggle on that perspective is, they locked into a higher rate.
Yes.
And their renewal might be coming up, but they can't switch because they're not going to pass the appraisal on the new lender. Right. So usually most banks will only lend at 80% loan to value.
Yep.
Right. And if you're trying to move from one lender to the other and, you don't pass like their desktop appraisal, you do a full appraisal, you're not going to be able to move it because now, I've had a few situations now where they're not able to and they're stuck with the same lender and sometimes the lender is not offering the best rate or a competitive rate to them, right? And they're kind of forced to kind of stay with that lender, right?
And I feel like lenders can kind of gauge if you're in that position or not. They can They can see your credit.
There's research in the back end. As much as they're not asking for any documents, they're definitely looking at some maybe, if it depends if you have your accounts with them and whatnot, they can check on some like, income behaviors. If they know like, hey, like it looks like there's only a single income coming in, let's try giving them, a higher rate, maybe the posted rate, and see how they react, right?
Yeah.
And sometimes I've actually seen people where they've signed on the posted rate,
which is crazy. Listen, like I'm actually in the middle of a renewal.
When I see the posted rate, that's the advertised rate by the banks.
Yes.
The advertised rate by the banks is at least 1 or 2% higher than what the mortgage rate that you deserve to get.
Yes.
Right. So,
exactly.
Yeah.
A lot of people don't realize that you can actually negotiate your rate, right? Yeah. Because the way, like when you go in, the moment you ask for this discount, like you get dismissed. Mm-hmm. They almost look at you like you're a little bit crazy, right? Like, no, you're not going to get this. Yeah. Nobody's getting these rates. I think if you are serious about getting the good rate, 2 things have to happen. 1, you have to be able to stomach this payment that you're in right now. Mm-hmm. And 2, you have to be able to walk away. If you're able to walk away from like the negotiation table, then yes, they might come back to you with a better rate. Yeah. But if you just walk in on that first appointment, you negotiate and you sign off, realistically, you didn't get the best rate that you could have gotten had you just pushed a little bit.
And it's unfortunately it's one of the main factors why the bank takes advantage of this is there's no financial education provided to people to know to shop around.
Exactly.
The only education they get on that is, well, now there's social media, but before it's just like people telling people, right?
Yeah.
Hey, I actually got this rate, right? Now there's like, all the forums and whatnot, but that's traditionally what it is, right? So if you're not taught that, hey, listen, you never take the first offer that's provided to you for your mortgage rate, then you would never be provided that as an offer to begin with, because the bank just knows that they're wasting their time.
Yeah.
Because they know, okay, like it's like playing a game, right? Like, you give a person whatever it is, and 1 in 5 people might take that rate. you're gonna keep providing that because it's still worth the margins for you to get it, right? But if every single person was rejecting it, then why would they waste their time doing that?
They would know better.
You know, they would know better, right? So I think that trend will definitely die out for sure. Because now I would say most people are shopping around, right?
Yeah.
Which is great.
But I think it goes back. I think it goes back to what you were saying with like some people don't have the options to shop around. And so like that actually kind of comes out like in their negotiations. They're not as confident when they're speaking because they know they don't have a fallback.
Yeah. That's
right.
True. Yeah.
And so like, again, this is part of negotiating. You need to be able to walk away.
Yeah.
Otherwise you won't be able to get the best deal.
Yeah. That's true. Yeah.
And so like back to that point is like, I don't remember what rate I was offered like last week.
Yeah.
I think it was like 4.4 or
I think 4.4 is what you mentioned to me. Yeah.
Yeah. And then I think they had while we were negotiating, he had come down to 4.3. And even then in our conversations, he was being very dismissive.
Yeah.
Like, listen, man, like I've been doing a bunch of renewals for the last month and a half and 4.3 is the lowest. You're going to be crazy to get anything better than this. And then I messaged you while I was in the office. I'm like, should I take it? And you're like, no, walk away. You can get a better deal. Mm-hmm. Sure enough, like less than an hour, I get a message.
Yeah, 4.2.
Even you were shocked.
I was like, well, that was
came
fast.
back that quickly. Exactly.
Yeah.
So he came back with 4.2 and I still didn't end up taking it. Yeah. And as you suggested, like I'm going to wait a little bit and I think I'll probably end up getting a better rate. So anyways, moral of the story, negotiate.
And you're, using a broker is going to help you do most of the job for you, right? At the end of the day, a good broker is never going to tell you not to go with that lender if they're the best rate for you or best option for you.
Exactly.
Right?
And I'm not even just saying this because Varshan's here. Like I've always preached this. You shouldn't really be going to the bank to get your mortgage. Always go to a broker because they have access to all the lenders and all the rates. A bank can only give you the rate that they have in-house. Mm-hmm. Yeah. The other problem with dealing with the banks, and I can tell you this because I used to work in a bank when I was younger.
Here.
Yeah. You did too.
Same here. Yeah.
It's like the reps that you're dealing with, they're not all created equal. Mm-hmm. They're not all as aggressive. They're not all as ambitious. And some people don't take your file seriously. Yeah. It falls to the wayside.
And you might be working with someone completely new to the bank that doesn't know what the process is like to get a better rate. Like
exactly.
Some of these banks have pricing desks and certain procedures on how you can negotiate and get a better rate.
Well, what I was going to say is like, for me anyways, as a realtor, some of my most frustrating transactions were when my clients were dealing with the bank, right? Mm-hmm. There was always miscommunication. Like, yes, the pre-approval is there, but like near the end, there's a bunch of things that come up and it's like, well, all of these things should have been taken care of beforehand. Mm-hmm. It's just they didn't have the right person handling the file. This doesn't always happen, but it happens more often than you would think just because, again, the people that work in the bank, they're there for a paycheck.
Yeah.
It's not like dealing with a broker.
There's no liability for them.
And there's no liability. Exactly.
Yeah.
So anyways, long story short, if you're getting a mortgage, if you need a mortgage, always deal with a broker. Yeah. It's the only way to go.
Because they work with the banks as well, right?
Exactly.
It's not like you're getting some private lenders or, quote unquote B lenders that, are not as good as the bank. You're working with the banks, with the brokers as well. And the biggest part, just more so what you said, is a lot of people, they treat mortgages transactionally, right?
Yes.
It's like, hey, I bought a house, this is my mortgage, just tell me the best rate, right? But if you really want a solid mortgage, you definitely need to have some sort of advice and like make it strategic that it's going to help you, reach your goals, right? Whatever it is. If you want to pay off your mortgage faster, if you want to, increase your net worth, if you want to save on your taxes, like different strategies for different people, right? You have to make sure that there's an advice piece attached to whatever you're getting. Getting the lowest rate is definitely the most important thing, mm-hmm. right? But you want to make sure that lowest rate also doesn't come with any, negative factors or anything that's gonna, that's gonna not allow you to do certain things with your mortgage, right?
Agreed. Like I think what you're speaking to is the fact that like a mortgage broker or realtor, whoever it is in this process, yes, it can be transactional. It could be a one and done thing. But if you plan this right, it actually is an investment piece. It's kind of like your financial planning. Yeah. The way you have your investment planner, like this all gets tied in. You can help them plan for their future in terms of, how to structure certain things in their portfolio.
Yeah, like a simple thing I'll say is like we had a client that they purchased a property and the bank was telling them, yeah, you put down this X amount and you'll get qualified and whatnot, right? What we were able to do is we were telling them, okay, instead of putting that down, right, why don't you put down the same amount but get a re-advanceable loan, which is a home equity line of credit, right, available for you, so you can now take that money and invest it, whether that's stocks, your own business, or an investment property. So because they were able to do that from the get-go, the client, one of the borrowers had lost their job.
Okay.
And now, if they didn't have that line of credit, they wouldn't have been able to support themselves until she got back on her feet. And she was telling me, she's like, if I didn't have that line of credit, I wouldn't have lasted 6 months. I would have rushed to get a job that would have been underpaid, right? That I didn't feel fulfilled in. She's like, because I had that leeway and I had that, like, in her mind, she was like, I have 6 months guaranteed I can just pull from it. And
she has a cushion.
It
gave her a little bit of peace of mind.
Yeah. And she's like, because I had that, I was able to, keep interviewing, find the ideal job for me and get back on my feet. Right. And that's what she was able to do. And she was actually able to find a job that pays much better than what she originally, was making.
Yeah.
So, these little things that people don't think about, right?
Yeah.
So if you have an opportunity to do so, you should open the line of credit up as an example, right? There's no additional cost to having one, right? So again, going to the bank, they were never advising her that, right? And that's what I mean by, like, we still got her the lowest rate, right?
Yeah.
But that's advice piece is what makes the biggest difference, is what I mean, right?
Yeah. Like, again, it's like, an order taker versus an actual like consultant. And I think that's like the difference you're making here.
Yeah. And that's what a good broker does, right? And not to say anything about the banks. There are great people that work at the banks as well. But what I'm trying to say is make sure it's not a transactional process. Make sure there's some sort of advice there and, some sort of like holistic view on your finances and your, long-term and short-term goals, right? That's what it
exactly. Is. And one last thing on that too is, like, I think there's also something to be said for dealing with one person long term, right? And I think you're more inclined to get that when you're dealing with a broker versus dealing with a rep in the bank. Like, these people are there like just for a short time in their career and then they move up.
Oh,
right?
Yeah,
and then you're in different heads.
If you're any good at your job, you're gonna look to advance in your career, right?
100%.
You're not looking to stay in the same thing for 20 years. Like, it's very rare you are, right? So.
Exactly. Anything else that we should talk about real quick?
I think that's everything, man. I think there's a lot that's gonna be happening in the market. Spring market's coming up. I personally think there's gonna be a lot more listings coming to the market.
Way more listings, yeah.
But I think there will be demand. But I think if you have a good property, it will sell. But if you have something that really doesn't show well, probably sit on the market for a while and you might take a loss. So
yeah,
I mean, a good realtor like yourself should be able to advise you on what's best for you. So yeah, I mean, it's going to be an interesting few months, especially March 1st. What happens with the tariffs. So yeah, I'm looking forward to lower rates, man. That's going to help everyone, right?
Yes.
So
yes,
definitely.
I just think I would just say, like, there's going to be lower rates this year. Sales are going to be up this year. Just don't misunderstand that for
you need to buy. Yeah,
you need to buy.
No, buy when you can afford, right?
That's it. That's
buy when
saying.
It makes sense for you, right? Actually, let me leave it on this note. I wrote like a quick was it like a tweet on Threads on Instagram Threads,
but I guess, like, yes, is there going to be more downward pressure on the market this year? Mm-hmm. Yes, and it's going to come from the fact that there's going to be so much inventory. Despite the rate cuts and despite it being more, affordable for certain people, the inventory is just going to outpace everything. Yeah. And, like, realistically, we're going to be in this flat market for the next couple of years.
I agree.
Right?
Yeah, I agree. And I think that's just what people need to expect, right? And if we have increases, perfect. But yeah, I think real estate usually just tracks against inflation, right? So
exactly,
just go based on that.
So it doesn't mean like you should be thinking, positive or negative either way. Just do what you need to do, and that's it. And when the market does pick up, hopefully you're holding an asset that is tied to inflation, like a home, and you're going to make money. But, like, to try to time the market and predict everything, this is not the environment to be doing this kind of stuff.
And it's interesting because I find a lot of people, even when the market's up, they never sell because they're like, oh man, I love to sit on all this cash.
Yes,
right.
yes.
And then also a lot of people start thinking about capital gains.
Yeah.
And they don't want to sell because of capital gains. So it's interesting to me because like when people are at a loss, they're more reluctant to sell. But I mean, they're reluctant to sell. But when they're at like a high gain, like 200, 300K gain, they're not willing to sell.
So you know what? Since you brought this up, let's like not move on from this real quick. But the capital gains, right? So when they announced that was last year.
Yes.
It was so short.
Yeah.
Like it was done in such a strategic way.
Yeah.
Where you were unable to financially plan. There was no way to meet your financial planner or make any sort of movements in your portfolio to escape the HST,
yes.
right? If you were holding a property.
Is it HST or just capital gains?
Capital
right?
gains, sorry, I'm saying HST. Capital gains.
Yeah, yeah.
So like if you were selling your principal residence, you were going to pay capital gains or investment property, whatever.
Investment property, yeah.
Yes. There was no way to be strategic about moving your portfolio around, right?
Yeah.
And essentially liquidating.
There's a lawsuit, I think, because of that.
There is
right?
a lawsuit.
Yeah.
So I was going to get to that. And so my theory was, at the time anyways, they did that in that way because they were afraid of people panic selling and liquidating, which would like further pull the market down.
The market, yeah.
Right?
Yeah.
And so they did it in a short amount of time where you didn't really have enough time to plan. Boom, it goes into effect.
Yeah.
Right. And now they've basically announced that they've deferred it, right? Yeah. They've deferred it for one more year.
Yeah. 2026.
Exactly. And I'm not sure that they've actually deferred it or this is just what they have to do because of this lawsuit that has come up.
I don't think it'll come up. I think it'll be
going to get washed away.
Washed away. Yeah.
The lawsuit or the capital gains tax?
The capital gains tax.
Okay.
Yeah.
That's the
Whichever
ideal.
government, even if it's liberal, I personally think, like obviously I'm not an expert, but I personally think it's going to be cut. Like they're not going to go ahead with it.
Okay. So I hope so.
Yeah. I hope so, man. There's way too many taxes.
Exactly. But they and if that is the case, they should start communicating like that message, especially the liberal side.
Yeah.
Right. Because that is where this policy came from.
Yeah.
And I say that they should start.
Well, it's a former finance minister, right?
Yes.
That kind of spearheaded it, supposedly.
But we view it as a party, right? I think most people like view it as the party is in alignment with these policies.
That's true. Yeah.
And so the reason I say they should start communicating this now is because if you don't, there is going to be a segment of people that are going to start planning for this, planning their escape plan. Right.
I mean,
and like that
when
could
have
also,
they ever given enough like time to.
Well, this 1 year now. Right. So like essentially now you have a year to do whatever you need to do. So if that was in the back of your mind, you're going to make that transaction happen now. Right. Because now you have a whole 365 to plan. Right. And so anyways, if that is the case, if we are going to scrap this, like they should communicate the message ASAP.
Yeah. No, that's true. Yeah. Well, that was a bit of good news for us. So we'll see how it plays out.
Yeah.
But yeah, I think that's a wrap.
That was a wrap. It was a good episode.
Yeah.
All right. Next time.
Yeah. We just like cut it off earlier anyways. Yeah. I think we got to edit a few parts though, because I think I struggled with the little things here and there.
So if you can just tell me which.
Yeah. When you upload it,